Hi, this is Roscoe here at the Small Business Buyer, and this video is going to be about sellers. Now, most of the time, I don't deal with, I shouldn't say I don't deal with sales, I don't teach sellers how to sell businesses. I actually teach buyers how to buy businesses, and in many cases, I will try to partner up with buyers to help them complete transactions in the small and middle-sized market, which can be anywhere between maybe 2 million in sales on up to 20 million in sales or more. But in this case, I wanted to spend a little bit of time talking to sellers because not enough has been done to talk to sellers about how to sell a business. The interesting thing about sellers is typically you only sell your business once, and that is not exactly what I do. I buy a business more than once, not the same business, but other businesses, and so I make a practice of buying businesses. And from that angle, I can assist sellers in the process of selling a business because I kind of know what the sellers need on their side and what the buyers are looking for on the buy side. And I put this is on the site lbo-deals.com, and this is just a few key items that you need to be aware of when you start the process of selling your business. And you do need the appraisals of key assets. Nobody gets an appraisal when they start out. Sellers don't do any, typically they do not look to do a lot of homework up front because they're busy running their business, and so obviously you're not of the mind to be worrying about numbers, worrying about appraisals, worrying about things like that. But as a buyer, you're going to look at both the balance sheet and the profit and loss statements. Now, when it comes to the balance sheet, the key part of the value for a company is what it's worth, what the net worth is. And the net worth is a function of what assets and liabilities are there. And some businesses have lots and lots of assets, and some businesses have very little in the way of assets. My statement on appraisals is aimed at those who have a fair amount of assets, because those are the assets that may be very valuable, such as equipment. Big ticket construction equipment is a good example. Cars and other types of production equipment, such as CNC machining, injection molders, stuff that costs maybe anywhere between $50,000 on up to $250,000 or more on a new equipment basis. Those are valuable assets, and they typically have a very good resale value. So you're going to want to know exactly what those assets are worth and what they're worth to the buyer. So the best thing to do is to get an appraisal ahead of time. And this is incidentally especially true with real estate, because real estate needs to be appraised anyway, for the most part, for a lot of reasons. But when you're selling your business, the appraisal on the real estate is critical too. And I would say that you probably do not want to wait till the buyer asks to be doing those appraisals, because you'll just delay the transaction. Now, the second thing you should be aware of is tax planning advice. I spelled it wrong. Okay, so we'll redo that. Tax planning advice means saving taxes on the exit strategy. Of course, there are a lot of ways of doing that, depending on what your tax objectives are. It's not something I can deal with in depth here, because it really is deal specific, and you really need to worry about this when the time comes. It's not something you can really do in advance. You can have an accountant look at your taxes and have an idea of how you want to complete the sale, but in the final analysis, when a transaction is put on the table and the buyer actually makes an offer, that's the time to get the accountants together and worry about the taxes. But I will say that the taxes can be critical to the deal and can be a deal breaker if they aren't if they aren't exactly put together correctly. Now, the next one is prepare complete financials, and this should be self-explanatory. Most businesses have financials prepared every single year, and oftentimes during the interim periods too. You will need at least 3 years of prior year's financial statements plus any current interims that exist, and a buyer will want all that information, and you should have it ready to go to distribute to the buyer. Now, here's a tricky one, and this is where I can help, because this is kind of crazy. When understanding your valuation. Now, a valuation is, well, what's the company worth? And there are a lot of ways of computing a value for the company. But what is very interesting is you can wind up with a valuation one day and it can be completely tossed out the window the next day, and that's for obvious reasons, because your circumstances surrounding your company change, and you may well have brand new set of numbers in a month or two which completely throw the previous valuation out the window, because maybe you're way up or maybe you're way down, and profitability. A lot of things can happen to a company in a very short period of time. So what we do for sellers is to simulate an offer and simulate a valuation. Based on the numbers you have, we put together a valuation. We can even throw out an offer even if you are not serious about selling your company. But it's something we do for people who come to us that actually want to sell that are thinking about selling their company. And this won't be somebody who, if you're a seller, for example, you won't be using a broker yet. The broker will probably do the same thing for you. The only problem is they're looking at it from a different set of circumstances. They're trying to sell your company and make a commission. We're trying to buy your company and actually run it. But you need to maybe get a couple of opinions in terms of valuation. So if it comes to the point of you needing you as the seller needing some sort of an indication of what an offer might be or what a valuation might be, and you want to verify somebody else's numbers, you can certainly come to us and we would be able to do that for you. And we don't do valuations, we don't charge for the valuations. It's something that we actually do if you're ready, because not everybody is ready with the numbers or can actually put together the numbers that are necessary for the valuation. And then, of course, knowing your transition, that is a personal ownership thing, because a lot of people sell their businesses in order to retire, and you will want to understand exactly how you're going to leave the company. It could be over a few months, or it could be over a few years. It could be forever that you're staying with the company. Maybe you want to stay with the company forever in a capacity similar to what you're doing. We as buyers tend to want to keep owners on for quite a long time, because we know that they've been running the company adequately, and we are perfectly comfortable with that and want them to continue on. Now, that has a lot of different angles to it depending on each deal. For example, some transactions have multiple owners, and some owners want to get out, some ones want to stay in, and of course it can be a mixed situation where you might have some staying, some going, and of course we have to take all that into account as we buy a company. The next one is in providing for employees. Well, you want to understand from a buyer's perspective what the employees would want to do. Would they want to stay? Would they want to go? Would they sometimes companies relocate as part of a sale. Would they want to go with a new owner? For the most part, the answers are yes, but you want to take care of them, and I realize that most owners want to take care of their employees, and that can be a huge motivation and can drive a sale one way or the other. So it does have to be taken into account. And finally, consider the estate planning objectives. You're going to want to talk over with your attorneys how you should plan for a sale, and in some cases it's not something that you need to deal with right now, or perhaps you've already dealt with it. And so it is a discussion you should have with your attorneys as to leaving the remainder interest in the hands of your heirs down the road. So now all this is one way of indicating to a seller that we can help out. We're not attorneys, but what we are is financial experts that do deals. We actually buy companies. And if a seller is interested in coming to us and learning more about what we can do to help out the selling process, or putting together an offer, or putting together a valuation for you based on your numbers and what you have to tell us off the bat, then we will be able to help out and possibly even do a buyout from you if you are in a position to sell. So by all means, give us a call. We're at 203-245-6870, or you can go to www.lbo-deals.com, and you can join our mailing list or just give us a call. Thank you very much.